Good evening, everybody, and welcome to another edition of Live Market Analysis. It is a pleasure to be with you, as it always is, when we get to chat markets on a Monday night. Let us quickly do the disclaimer. Remind ourselves that everything we're going to discuss tonight is general in nature. It has not taken into account your personal financial circumstances or objectives. So before acting upon any of this general advice, you should consider it carefully and seek the help of a financial professional to determine if it's appropriate for you. Trading and investing is risky. You're going to lose money at some stage. It's inevitable, but it's how you deal with those losses that determine how much you will win in the long run. Ultimately, it's you and I. It's you and I? No, it's you. It's not I. It's responsible for the stuff that you choose to do. Because, hey, it's your money. It's your choice. The agenda for this evening is you request certain stocks, commodities, crypto, bonds, indices, anything from the universe of opportunity that I can get a chart on, and I'll give you my best technical analysis reader on it, or it could be anything about the 3 M's of trading and investing. That is the methodology, how we get in and out, the money management, how much we get in, and I guess how much of our total capital we risk, and the mindset, how we think about our trading, how we apply our trading plans in a consistent and disciplined way. While those requests are rolling in, I'm going to head over here to the Amy Broker screen and I didn't intend to kick off there. It's just something I had up as people were arriving to tonight's presentation, but it does demonstrate some of the silly things that we often say, don't we, when markets feel like they've gone up too high. And look at that chart. That's the Nasdaq composite going back to 1994-ish, so 30 years of bulls and bear markets, and the general trend is up. That's what stock markets do. That's the whole point of stock markets of companies is try to make more money next year than they did this year by becoming more efficient and finding better technologies and riding new trends. So we shouldn't be surprised that the stock market goes up every year most of the time. But the worst thing we could do is make excuses for what ultimately comes down to the interaction of 2 key forces, and that is demand and supply. But I digress. Let us refocus our efforts on our technical analysis here, which helps us understand when the balance between those 2 key market forces are changing in such a way that that uptrend becomes a less likely proposition. And my philosophy of more often than not. If my technicals tell me that something's going to happen more often than not, and that's just based upon my experience, then I'm happy to back that trend. But if the probabilities start to slip, then I'll reduce my risk to the point where I might have very, very little risk at all in a downtrend, or I might be short. There's no reason to be short here. There's only reason to be long. We have a short-term uptrend in place. That is, traders, they want stocks. Not only do they want to buy those stocks with the cash they own, but the stocks that they do own, they don't want to get rid of them. That's causing other people who have cash to bid up the prices to entice supply out. The longer term positional investors, they also want stock as well. You can see that's dark green zone. Both of those zones are acting as zones of dynamic demand, although the long term one hasn't been tested, but certainly the short term one has been impeccable. I mean, that's just, it's actually, I'm actually going to say it's quite rare to see the short term uptrend respected so well over such a prolonged period of time. In fact, I was going to say we haven't closed beneath it. It's just that candle, and that was Trump's candle too, right? When he threatened again harsher trade sanctions on China, and save for that one sentence that that person said, I would have been able to say no closes beneath the short-term uptrend ribbon. Price action is rising peaks and rising troughs in here. Take out that candle, it's more broadly as well. That's I'm so annoyed by that candle because, it otherwise everything was doing what it was supposed to, and we have a predominance of demand side candles as well. And that's really important because those white candles speak to pervasive buy orders in the system. So fund manager X wants to buy so many $1 billion worth of stock, or so many $100 million worth of stock. I mean, these are the orders of magnitude we're talking about. And they obviously can't go on the bid for $300 million worth of stock, or, It's going to let the market know what they want to do, and it's going to scare away the sellers. So they break up that $300 million into tiny little parcels and just drip feed those into the market. And if Fund A, Fund B, Fund C, Fund D, if they're all thinking the same way and they're all doing the same thing, you've just got this natural flow, this natural order flow of buy orders just hitting. And if supply isn't sufficient because there's just no good reason to go the other way, you're just going to see these white candles. That's what white candles represent, downward pointing shadows by the dip. It's just pervasive buy orders. So at the moment, I guess there just aren't enough risk factors to facilitate supply to overwhelm this demand that's coming ultimately from there just being too much cash in the world. There's just too much cash, and interest rates are going down as well, which means that the opportunity cost, I guess, in cash is growing greater. So you have to get out of cash, and we're seeing the bond market go up, and we're seeing the stock market go up. And that is a story that is as old as the markets, ladies and gentlemen, and fight it at your own folly. Full risk position, I should mention here. I can't see a single thing in this chart that I don't like. I don't know what's going to happen tomorrow. I talked about this idea of, well, there's just nothing that is stimulating supply to want to overwhelm that or meet that demand, even meet it. But I don't know what's going to happen tomorrow. And there could be a major supply side event, driver, theme that appears. But the good news is that when it does, it has to appear as the candle that I've selected there, doesn't it? It has to appear like that. Now, that was due to the rantings of one idiot. But let's assume that the market won't be taken down by one idiot. It'll be taken down by something far more important. And we will see. I mean, to be fair, that was also one idiot, wasn't it? So maybe I've misspoken there. All right, let's keep moving, because I don't want to make it personal. And some people love that individual, and they don't think he's an idiot. So who am I to say that he is? All I do is read charts. Let Carl just stick to reading the charts, mate. And the charts tell me here also that FRP on the ASX 200 as well. What's interesting though, and this is where we do our whip around the grounds anyway, but we look at some of these other risk barometers, because ultimately that's what stock markets are. They are the best barometers of risk-seeking activity that you can get. I mean, crypto has rivaled them, I guess, because crypto is full of idiots as well. Different kinds of idiots, not of the magnitude of the other idiot, but lots of smaller idiots in crypto. I'm really going for it tonight, aren't I? But that's pure risk, isn't it? Pure risk and pure speculation. Some might argue the stock market is. I think the stock market is one step back from that, but it is definitely a gauge of risk. And we're looking at the S&P 500. If we head out to the mid caps, well, actually they're not as good. But interestingly, I saw an ETF that looked better than that. That's interesting. And we head out to the total return index. That's not what I wanted. I wanted the equal weight. I think that's somewhere else. I'm going to get to equal weight in a second. I know small caps are going up. I don't think I have the index there. But looking at European markets, and this is what I want to point out, is generally we have very strong markets all over the world. There's FTSE at new high, and the FTSE Spanish markets are at a high. The Hang Seng is not off a high, not an all-time high, but certainly multi-year high. The Nikkei is all-time high. In India, we're pushing up to an all-time high, and in China, nowhere near an all-time high, but that's because Chinese stocks can do amazing things from time to time, and that high was in the before the GFC. But that is an incredible chart, and I think I told you about it all the way back down here somewhere. So that looks good. That's the other one, which brings us back to us, where actually I think we're a little bit of the odd one out, and it's hard for us, I think, to stand out in an environment where all that other stuff looks good. So that doesn't mean we're going to be bad. It just means we probably won't be as good. That's my point. Let's look inside the ASX 200 now and see if there are any sectors that are probably going to be better within the mediocrity that we're unfortunately laden with. Probably not discretionary, although it has picked up a little bit. Probably not energy, although it has picked up a little bit. And it was maybe seeing this idea of the rising tide lifting all boats. Financials, it could come from there. I certainly wouldn't rule that out. That's one thing we are good at, is big banking stocks that pay big, fat, juicy dividends, and they're very stable. And if you're forced to buy stock and you're a bit risk averse, that might be where you're going to go. Big, liquid, nice yield, government protected, government backed. Gold has got some problems, and we'll talk about gold and silver in a little bit, or you can read my technical analysis today on ChartWatch Markets on the Market Index website. I don't think it's going to be healthcare. I'm not sure if it's going to be technology here. It might be technology in America, and this might get dragged up, kicking and screaming as a result. It could be materials. What other things are we good at, and what other things are we good at when there's money sloshing around the world that might help stimulate the global economy? Resources. So definitely worth keeping an eye on that one. Property loves it when rates go down because they're a bond proxy. So that could also do well. Probably not staples. Less reason to be defensive in staples, isn't there? Probably not as much telecommunication services. Well, that's hard to say. There's a mix of technology here, and there's a mix of bond proxy, so divergent. Utilities bond proxy, we can see that's doing pretty well. We're down the list. So look, interesting times, no doubt. And, we've just got to keep an eye on how some of these squiggles on our screens play out right now. This one's squiggling in the right direction, isn't it? Aluminium, copper. So some of these things hopefully are starting to click together for you. Iron ore, nickel. There's other things going on in the nickel market. There's a lot of supply out there. Lead, tin, and zinc also looking good. And how about this one? Lithium carbonate. Also turning up as well. And this is not the one I maintain now, actually. I maintain this one over here. But you can see it has pushed through some key resistance zones, and all it's needing really to be declared a new long-term bull market is a pullback and test of that long-term trend ribbon, and it'll be there. But I do note that Australian spodumene has already done that. So in fact, that is here where we started. I think that's how found it. I was mucking around there, and we're going to go back to it's not there. Where is it? It's not there. It's not there. Yeah, demand is strong. Where's my bloody chart? Anyway, it doesn't matter. We can see there that it is here, and I go here, edit formula, and I just took those things off. There we go. That's the wrong one. That's the one I want. Spot spodumene. That's where I'm trying to go. Because I really wanted to show you that the trend ribbon has worked so well here. And I only started collecting data for this back in late 2003. So that's all the chart we have. But obviously it takes X amount of time for the long-term trend ribbon to appear as a result. But just perfect, isn't it? Just perfect. Dynamic supply. And then almost perfectly, again, dynamic demand. And that delineation between downtrend and uptrend is just amazing. So that is already, as I would classify it, in a bull market compared to, say, that one, which just needs one more test. I mean, this never tested above it. It didn't really test and hold above there effectively. So, okay, let us keep moving. Pick up the pace, Carl, because you're taking too long. Going to head over here and go to silver, work our way up the list. I think we've got some problems here. Again, I mentioned it in today's ChartWatch Markets. This is a pretty serious supply side showing. You'd have to go back to here. The difference between here and here, well, you tell me what the difference is. This was far less severe. Even back at the time, and this was all ebb and flow. I mean, there just wasn't the same sort of exponential move that occurred before really any of these. So this is really the first major showing of supply. And the difference between here and here is this rallied back very quickly. This is a V-shaped rally. And here, not to say it can't happen, but it needs to happen, I mean, really almost today's candle, doesn't it? 1, 2, 3, 4, 5 candles. We're halfway back. 6, 7 candles, probably close to 2/3. Consolidation is okay, holding the line now. Bang, bang, bang. This is 1, 2, 3, and if this comes down here and goes below 46.70, there is no V-shaped rally, and that's not a good sign. And gold is looking pretty similar, but not quite as bad. So pullback stuff. I'm not calling the end of these bull markets, but we are seeing signs that supply has arrived. There's a bit of it around, and it's really testing the demand side's resolve. So exponential moves are created by FOMO, ultimately. The fear of missing out, the greater fool theory. People, to the exclusion of everything else, only seeing this thing and it's going up, lines around the block to buy physical gold. And those things don't worry me. I'm happy to ride the trend, but without that FOMO, without that expectation that there is a top there, the move can perpetuate itself. So we can see there's a top, it's defined. When there's no top and we're heading up, we don't know where that top is. So all we're doing is fearing missing out. Now we're fearing supply. Now we're fearing the supply side. We're fearing the supply side will come back in. We're not feeling that need to fall over ourselves to buy in because we can see that supply is evident in the market. So FOMO is less rampant here. And the supply has pegged also a place where they think they want to sell to. They won't want to risk now not getting out on the next rally, okay? Because supply held on all that way. They also didn't know where the top was. It was not defined to them. So they're holding on in hope of getting a higher and higher price. Now everything's defined now. We kind of know where each party stands. We know that there are two parties at play before there was only one. So this is the psychology of a top, of any top, of a pullback, of just a pullback top, or at the end of the bull market top. They all start the same way and with the same psychology. And nothing, well, we need FOMO again. Nothing kickstarts a resumption of the trend like a bloody resumption of the trend. Big white candle. There's a thematic, there's a news driver, it breaks, and boom, that candle's back in, and then everybody's back in the mode again. The longer it takes to get that, the more likely this thing will come back to that longer term trend ribbon. So interesting on the way up, just as interesting now, I think. Looking at copper, looking good, obviously in line. Well, looking better here. It's a very different environment on COMEX compared to LME, but starting to reflect each other better. Iron ore looks fine. I think this is a bit of a sleeper here. I think this could do interesting things towards the end of the year. Seasonally, this is a good time of the year. November, December, January, February are seasonally the strongest times for the iron ore price. Uranium is neither here nor there. Disappointing, and I don't know, maybe a little bit on the back burner. Hopefully it can pick back up, head above 80 and get some FOMO going itself. Having a look at, say, Brent Crude, these are rallying but still ultimately stuck in the middle. Thoroughly uninteresting markets. Like you couldn't knock any less interesting markets than those energy markets right now, which is a bit of a shame. Okay, we'll have a quick look at bonds and indices, and the index I wanted to show you was the equal weight index. There we go. So that's, we should have looked at the Russell 2000 as well, but rather than looking at each US stock based upon its capitalisation or the impact of its capitalisation, this is saying everybody's got the same weight. How does it look? And this is more of an egalitarian look at US stocks. So that's also good, and that's an encouraging sign. And then the Russell also heading towards highs. So that's supporting. No red flags here. No red flags in the two banking indices, although worth keeping an eye on. Having a look at the bond market, of course, because we want to see where the price of money is headed. Generally, the price of money is heading down, and that is facilitating a continued move into stocks because, as I said, the opportunity cost of holding cash grows. There's a lot, lower interest rates are expected in the US. We could get a rate cut later this week. In fact, we will get a rate cut later this week. We don't want to see a precipitous fall there because it will mean the US economy is in the toilet. So typically we would think when rates are rising, it's bad for the stock market, and yet you can see that rates have actually gone up for the last 1, 2, 3, 4, 5, 6, 7 trading sessions. And the Nasdaq's making a new high over those 7 trading sessions, yet when Trump said his things about China, the bond market fell. So the bond market rising, and that's this chart going down, because there's an inverse relationship between bond prices and bond yields, that's fear. Okay, so we're riding this delicate, walking this delicate tightrope between fear and the fact that official rates are coming down, and we don't want to see the fear element take over, and that will be if the price plummets. So it's a little bit counterintuitive, because you'd ordinarily associate rising rates with the falling stock market, and that's not the case now. It will be the case if this chart was heading up, but it's not. Okay. Bottom line is, what's my job? My job is to try and teach you some of this economic stuff, macro stuff, I guess, so that you can do some of this year analysis yourself if I happen to not be around for whatever reason, hopefully because I'm on holiday or something nice like that. But yeah, I mean, there are different scenarios when these lines are going up or going down, are good and bad things. So hopefully over the years of listening to me, maybe some of this, I'll give you a thumbs up or thumbs down if some of this is starting to gel and you're actually starting, because I try and cut out all the crap, right, and just focus on just the important stuff. And I think most of the time, I've got an explanation for you, often in advance, and then we see it happen. I say, well, see, I told you so. So yeah, anyway, I think we're okay here, is the bottom line. I think we're okay on many of these factors. And as I was trying to say before, my role is to alert you if I see something really bad there. So if I go, oh, actually, hey, everyone, this could turn out to be a really, if the shit hits the fan here, it's going to come back to the stock market. And I've said that to you, to be fair, 3-4 times, half a dozen maybe times over the last 3 or 4 years that you might have been listening to me, and generally this turned out to be the case. So I think we're okay here, is the bottom line. Let's go and do your offline requests. Not a huge, well, it was not too bad tonight. I was going to say, we often getting smaller groups over summertime because of the daylight savings. I want to get through everybody's requests tonight in a timely fashion, is my point. Okay, I'm going to head over here and do Mick. Mick's got 3 for us tonight. DAI is the first one, which we've done extensive work on here. And I don't think we need to go back. We've got a ZRP there. We've got a minus a third on, it's a condition there, I don't know what. A dollar. Major point of supply at $1, so a third off the table there. I've clearly highlighted these arrows as being something that's not great. And I think we all know maybe that candle might be a third, or maybe that candle, certainly that candle's a third. And for whatever reason, we said ZRP a while ago. We obviously haven't done this for a while. I think here it's beyond any semblance of having risk. And there's not a great deal of reason to get back in at this stage. Certainly this is good. We like this. We want to see that. This is good too. Actually, that's a nice candle. So we've got some demand coming back in. We're getting above the short-term uptrend ribbon. It's turned green. We held the long-term uptrend ribbon. That's important. And yeah, look, I can see a reason to keep an eye on this, Mick. I can't see any reason to get any risk into it just yet. Today's candle certainly doesn't warrant that. That's obvious. Neither does the previous day's candle. But when will it be warranted? Well, obviously something that looks like this would go a long way towards warranting the addition of new risk. Okay, and it would have to be a candle that good. I want to get rid of. Look, I do like to see the stuff we've done in the past, but for me, I think it's confusing. I just want to look at it clean. I want to go back to my normal zoom and use my imagination and say, well, what sort of candle would get me back into this? So I think that's how we need to look at it now with fresh eyes. And just do that again. And if we saw something like that, how would we feel about it now? Right? Actually, I think that actually starts to look, that would actually look very good to me. Yeah, I can see that better now with all that other stuff on there. And yeah, we've got a very much an A-shaped pullback. And to remedy an A-shaped pullback, we need a V-shaped reversal. And we've got the start of that. We've got a couple of days pulling back inside this demand candle, and that's fine. But for me, it would have to be a strong demand side candle. There's definitely some good, look, I mean, there's some volume here. So we've removed a bunch of that. This is all supply, just getting bigger and bigger because people are just panicking out increasingly. And then it looks like the demand side kind of dealt with them and took them out, and it turned out to be the low. So even that reversal there, this price action off the trend ribbon with this volume, yeah, it tells me that some, look, what's high volume? I mean, that's what, 3 times average? This is at least 2 times average over those 2 days. Lots of demand came in and soaked up lots of supply to the point where there wasn't that much supply left. How do I know? There was lots of demand and lots of supply, lots of volume, obviously. Volume is buying and selling. So we can say that with absolute certainty. Lots of demand hit lots of supply. But now we go to the price action and we say, well, yes, but kind of what happened next? Well, where was the supply? The supply was largely exhausted after that exchange. And all that was left was motivated demand. Now it rallies back up to here to the point where 60 cents hits 90 cents. And if you got in at 60, you just made a 50% profit in 3 trading days. Think about that for a second. You just made 50% profit in 3 trading days. We probably shouldn't be surprised that a few of those buyers are turfing out a bit of that supply, or sub-supply now taking profits. But we should see, if it's just profit taking, if it's just I'm making a bit of money here, I'm going to take some off the table, then we should see small candles. We should almost see less volume as well, because there's just less supply around to be soaked up by demand. We should see at some stage, though, the demand step back in. And I think largely given the supply has been cleaned out, it probably doesn't matter as much what the next volume bar would be. If it's high volume, we're clearing out supply. If it's low volume, then there is no supply. So you could argue, well, it doesn't really matter then, Carl. At this point, there are some points where volume is really important. I've just described one. Then some points where volume is less important. It's just you have to go through the logical scenarios in your head. So Mick, to answer your question, nothing for me right now. ZRP, as we've discussed, some good things happening. I need to see a candle that good again to warrant me adding some risk back into this one. Let's go to CTT, which is not that one, but that one. I think this one was also, we said a while back, we discussed it as a case study for an aggressive setup, and then we discussed it as a case study for a turnaround setup, but I'm not sure if we actually got to that point. Mick is asking about a continuation here. I can't see it being a continuation because that would be double greens. And I feel that the last thing I said to you was probably around this day here, because I always allow 10 days of padding so I can draw some future stuff. And the fact that it starts on that candle there is where the red line starts, and then this area would have been padding at the time. I feel that I drew this in to say, well, it was an aggressive setup. Now it's transitioned into a continuation setup because we've got the amber long-term ribbon. Everything else is in place, short-term uptrend, good price action, good candles. But really what we still need to see to confirm it all for us is this pullback and hold in the ribbon, on the ribbon, in the ribbon is okay. That certainly looked impressive there. And look, that would be the day that if you were to have taken some risk, that would have been it on that day. As it's still I think it's still an aggressive setup though, isn't it? Because it hasn't done the other stuff. Certainly no objections as an aggressive setup. No objections at all there. Because your reward to risk has changed. You're no longer, this long-term trend ribbon is no longer a barrier. That's not a barrier anymore, right? So we're not looking as barrier. We can still look at other things as potential barriers, and there's probably one there, one there, one there. But none of those really impacting, I think, greatly. And there, kind of there, What do I normally do? That, don't know. What do I normally do? There we go. I normally do the box, don't I? But you can do that. So let's do those. And that one under there. So those areas I don't really think are an impediment given our entries here. But yeah, so that would be the earliest place. I just want to use it as a case study because we don't get many of these, to be fair. The question is, what do we do with it now? So if, let's assume that you'd taken some risk on that day and aggressive setup, whatever it is, 1/6, 1/3, all right? Plus R, doesn't matter, plus R on that day, let's assume. Where do we go from there? Nothing day. Not great, not enough to do anything with. Nothing doing at all. Got a little trough under here. I think we're fine. I'd like to get out of the trend ribbon quickly though. That's fine, perfect. Respecting the fact now that we do have a shadow, so we're just going to move just under that shadow now as a place where we might manage risk. We do have a point of supply here. Point of supply, point of supply, point of demand is here. So these are things that you can do. You don't need me for these. These are objective, not subjective. That is the highest point between a short-term uptrend on its left and a short-term downtrend on its right. This is the lowest point between a short-term downtrend on its left, and then eventually here, uptrend on its right, and thus the same for here. Let's go to the next candle. That doesn't look great. If you did something like that day, I wouldn't complain. If you wanted to wait for this, I also wouldn't complain. Starting to look a little bit more ominous now. This was an aggressive setup. We took the risk. We chose to fight the long-term uptrend ribbon. We chose to go early. The long-term uptrend ribbon had not yet been confirmed as a dynamic zone of demand. That's okay. I'm not saying we did anything wrong at all. Quite the contrary. I'm saying we knew what we were doing. We took the risk accordingly. There we go. So I think we're flat there. I think we're ZRP there. Maybe it's that day. Maybe it's that day. Maybe it's that day. I think the writing was on the wall fairly early here. So you could have maybe have limited your loss a little bit there. And we get another lower peak here. We've got another point of demand. If you had held on to some for whatever reason, then I think your final point of no return is under there. And that's it. That's all I can say. I've gone through every possible permutation for this particular setup. Let's go to IPX. Super interesting case study. Super interesting. I love doing those because we don't get them that often. We get lots of these, don't we? How many of these do we get? We get these all the time. We'll go back a couple and we'll say, I know it's all navel gazing, but you see it 1,000 times. You see it 1,001 times, right? Why not? Would you do anything on that day? I wouldn't. We were not at $10. Jeez, look at these black candles. Doesn't that worry you? Doesn't that disturb you when you see all these black candles on the way up? But still, to the letter of the law, that's not. That is. I think we can all agree this ain't working out, and we could do something. It just the fact there's no rally on that day as well. There's a rally there, and if you got out the day before, on that day you're quite happy that you did. And I would say at this point here, it's quite simple. There's no way you would have a full risk position. Whether you're at 1/3 here or 2/3, I'm not even going to debate. That's your personal choice. But I think we could all see quite clearly that a close below is minus R. And let us go so far as to say also ZRP and move along, and there you go. It's that simple. And that's it. Say la vie. Either the trade worked out or it didn't work out. But if this thing's at $4 in 3 weeks, so be it. If it turns around and starts moving back up to 850, so be it. We'll look at it then. But if we broke even, we broke even. If we lost 10% of what we put in, we've still got 90% of what we've got to go and find another opportunity. That's it for Mick. Let's go to your onlines. We've got Al. Is it Al or AI? I think it must be Al, because could have AI. Could have AI tuning in and asking questions of me, so that when it gives answers to other people, it knows what to say. GMG. Let's go to Goodman, and we're going to zoom normal. It's always important to do that. There's not a lot going on here, is there? It's almost completely flat. I mean, you can tell. So I don't think I need to spend any more time on this. Do you want me to draw these sorts of lines and say, oh, well, if it starts to do this, it'll start to look good? Or do you just want to ask me in 3 weeks' time or 3 days' time when it's put some candles in that warrants some attention? So that's a big pass for me, because this just doesn't need any extra attention. Let's go to CEL, which is that one. This one here is not a full risk position anymore. And we do have some clear-cut sort of boundaries here that we would prefer it not to cross. So you didn't get a lot of warning, and that's the nature of the last 5 to 10 trading sessions on gold and subcritical mineral stocks. They exponentialed up, FOMO'd their brains out, and then the money just evaporated. The demand side just evaporated. There was no demand side, complete demand side vacuum, because everybody was in, and if everybody's in, who's left to buy? And then supply just built and built and built. As we go down, more and more people want to get the hell out to try and limit their losses. And that's hot money, hot money, hot money, hot money, hot money. So it's not much fun. I get it. My model doesn't do very well when there's little warning, when it just goes big black candle, because I need to see the candle to get out. So, but that's a double-edged sword. It goes well with all the white candles at the beginning. And if you are going to, you could, I mean, I'm just trying to find practical solutions for you. You could be, when things are going exponential, we talked about it here, moving to a more aggressive exit model, using profit targets, certainly focusing more on your round numbers, or we should be focusing on them anyway. But targets in terms of multiples of your risk. So let's say, your typical risk is $100, 3R, knocking a bit off the table, taking 1 unit of risk off at 3R, taking another unit off at 6R, for example. Okay. I don't like those as much. They make me nervous. Some people love those because they get money out, they feel good. Me, they make me feel like I'm going to miss. That's my fear of missing out, because I want to catch those trends to the end. But I'm just trying to give you practical tools that when things are hot like that, you don't. If you don't like this idea of holding through the pullback we're seeing on screen, where you go 18, 13 with no troughs in between to peg, right? With no, this is tough because this is not the most liquid stock. We're not getting clean candles here anyway, right? We'll probably see other examples tonight where the candles are cleaner and you still didn't have notice. So long story short, please, Carl, please. Could I have done anything on that day? No, I can't. I can't. My system says it's still at a great trend, right? Can I do anything on that day? No, I still can't. Oh, but Carl, it's going to go down. Maybe. We've seen black candles before, and it went back up. It went up again, and that's it. Like if then you like now's the time. Like now, there's no question about it. Obviously, point of demand, close below equals minus R. We've also got the short-term trend ribbon. We've got a full black candle. So if you prefer minus R, minus 2R, 2 units. And then today, unfortunately, it feels like ZRP to me, doesn't it? And you just didn't have, in terms of price, enough levels to get out unscathed. So, yep. It is annoying, I get it, but it is just the market we're in, and that's where we are. Let's go to MP1. Hayden's got for us here a continuation for plus R. I'm going to get rid of all this stuff again. Let's look at it with fresh eyes. Zoom, normal. Look, I think it's very warm. Let's say that. I'm a little bit concerned about that, as you would expect, and we do have obviously this. So ideally I have something resembling this heading back the other side, which means a dink first. And we don't have it yet. I know it's me being a bit pedantic. I see this and I think we're largely in a trading range. I mean, I think this is all the trading range. That's the way I look at it. So it didn't go in tonight's list, even though there are some things here that are very much going right for it. But I can't tell the future, and that's not meant to be a cop-out. There are lots of things going right for it. So it is possible that it doesn't pull back first and it just blasts straight through and I end up looking like an idiot. Oh, Carl, you told me that it needs to do a little dink, it needs to, test this point of supply, it needs to just at least be a short-term uptrend, and it just kept going up. It's absolutely, that's possible. Nothing really doing here yet, so that's okay too. I mean, there's not a lot of supply holding it back, but it's a bit thin too. It's a bit thin as in maybe there's not as much interest behind it, perhaps, as we'd ordinarily like, to get something going again. For me, I still need to see this. Give me any dink here. I just want to see. I know the supply. So why the dink? What's the logic behind the dink? And there is some logic here. We know that supply. We know there's excess supply up here, right? It was a point where people got out last time. It's a price that's stamped in the market's memory as a I missed it. I should have sold there. If it gets back up there, I'm going to sell again. So I know there's latent supply up there, or there should be. I just need to see how powerful it is. And whilst I'm heading towards it, I've got no idea of its power. A little bit of upper shadow today, maybe a hint. But if I see, obviously, and this is the risk, right? This is the risk. This is what, it's almost subconscious, hard to explain what makes this not go in the list today. I see that, and I see that supply, when it wants to be, is really powerful in price. And the demand side either unwilling or unable to stop it. And I see it here. I see it here. I see it here. I see it here. Right? There is that downside volatility for whatever reason. And I get it. It's come back from that. I get that part. But that's the stuff that makes me think, well, if it was there last time, it could very well be there next time. Now, if we get into that zone and we do something like this, what does it tell you about the supply at that zone? Compared to this, right? And none of them really have that dink. They sort of just here was a very low one, but they sort of just hit supply and the supply just won. So I just want to see one time where we hit supply and supply doesn't win. And then I think it's going to start to look very interesting. And you see the right candles in this zone here. And let me get rid of all of this, because I want to visualize that. What does that look like? So something, like this. Let me copy and paste a few, just to visualize. And that's why I like drawing these, these candles on the chart. You might get something like this. Come on. Well, this is probably a bit stupid to try and draw it here. And then something like this. That's not really a pullback, is it? So let's go make this. Yeah, you get the idea. What have I embarked upon? And then something like this. This will make sense now. You'll go, oh, Carl, I get it now. So what if we saw something? Oh shit! There we go. What? Okay, was that worth it? I don't know. Okay, what if we saw something like that now? For me, that completely changes the way this setup looks. Oh, but you know, Carl, if I get in here, I won't have to pay an extra $1 for it. Okay, that's just, for me, it's reward to risk. It feels riskier here than there, and I might have a little bit less reward, but that's okay with me. All right, that's the way I look at that one, Hayden. Let's go to NYR, which is in tonight's list, actually, for obvious reasons. That's still plus R. Yes, no objections there. And it is one of those wild ones. So if you, are doing this sort of stuff here, then go into it eyes wide open, watching. Really is nothing till $1 though. Oh, it's what about 75? Don't think so. There's a bit of watch out for 70, just on the basis that there's a bit here at 35. There might be a bit at 70. But I wouldn't necessarily do anything about it unless I saw a really significant supply side candle there to tell me that it is actually meaningful. But otherwise, all I can see is lots of interest, lots of supply removal, not a lot of supply around clearly, and happy to take some risk, but on the basis that we understand the environment that we're trading in at the moment. Let's go to CYP, which is the CYP. Okay, this one hasn't come up, and I can just see over here, you can see that the turnover filter is 0. And otherwise it looks good, no objections. Today was a bit of a nothing day, but that it doesn't detract from everything else I can see, which is a classic turnaround setup. Good price action. For me, I think that's the candle there. Would you agree? I mean, it's a bit sketchy. You could argue, oh, maybe that's the day there. Maybe that one there is the day. Test back, pull back, test, hold. That's the stuff we're waiting for, isn't it? The long-term trend ribbon uptrend here, but tiny candles, sketchy candles, not a great deal of liquidity. You can see here it's absolutely pathetic. In fact, you've got a day here where it trades. That's the moving average volume. The volume is 774 shares on a 21 cent stock. So, 774 shares on a 21 cent stock. So that would make you think a little bit twice. That for me is, I think, the actual first plus R, and that's the second one. That's the third one, and that's where we are today. So, what does that mean? It means if you've got it, plus R on the next demand side candle. If you don't, and you're looking to add some risk, that could be one you could consider. Exactly what Hayden had. He literally wrote equals R, comma, plus R. Well done. Adonis, thoughts on Google? We'll do that when we get there. And Perry's got ASIC stocks ELT, which is not that one, it's that one. That is amazing, and I'm wondering, how did I not see it? You can see here turnover filter again is at 0, so that means it hasn't fired. It's not enough liquidity, unfortunately. We can see like 26 shares on that day there. 3,000 to 26 shares on a 16-cent stock is what, $4 $4 worth of shares traded on that day. So it's not a no from me. It's just a no for me. But if you are look, and volume has improved exponentially. It's improved, so that's good. Plus R, absolutely. It was plus R here as well. Hopefully we can all agree on that. And maybe even on that day, maybe the upper shadow, but still very, very strong. And the real start of it was probably there with the lack of the shadow. But yeah, tricky one for me to comment on, given the liquidity. Let's go to TEA, which has got plenty of liquidity, so that's good. And also in the list, and you can see here we've also had some comments on it in the past. Minus 1/3. Not sure why I put that. It's not a round number. Oh, I wonder why that one is. I mean, yeah, it's a bearish candle, but it's not that bad. I can't say. We're going to go plus R here, or equals R, I guess, plus R on the next demand. No, just plus R. We don't have to wait for the next demand side candle because it is the next demand side candle. And tonight that also went in the features. There's the features for tonight, or for tomorrow, I should say. And we can see NYR is in there, which somebody had earlier on tonight. That was Hayden's. Hayden's NYR is in there. Quick look down the list. I don't want to steal anybody's thunder. Robert Scott, I can do them sort of as I go. I can see Robert Scott ABX plus 1/3. Absolutely, Robert, for obvious reasons. Do you need more comments on that short-term uptrend? Great price action, great candles, lots of interest coming in, no problems with volume here. We're in the millions. ASG just keeps going up. It's been in the list many times. This is a new one. I don't recall seeing this one recently, so I want to say this is the first time it's been in, because you can see 0 over here. So just see 0, 0, 0, 0, 0, 0, 0, 0, 0, 0, 0. So the ones that are sometimes 0, they can, there's enough interest coming in that they flick to liquid enough. Anyway, we're talking about $250,000 turnover a day on average for the last month, which is not much. So Credit Clear, that one's been in the list many times. Stairway to Heaven, EZZ turnaround setup, actually really nice looking turnaround setup. Fang, obviously Fang stocks. There you go. We started looking at this one all the way down here. FEX, hopefully some people on it. I'm guessing we've got a few people on it. GLN, I think, popped in, or definitely on that day. Maybe a day, maybe down there, I don't know, can't remember. That one's obvious. The South Korea ETF, MYG, NGI, NYR we've looked at. Rio Tinto, I think, deserves a mention as well because of all those white candles, a huge cluster of white candles. That is pervasive buy orders there. Semiconductor ETF, Shuro, SLX keeps going, SPL, SPZ. That one probably just stuck in a little bit, but it's got good bones. SRG, obviously. TA, Perry's just given to us. That one I had to think about a little bit. No dink yet, but it's got itself up to that level, and look at the volume as well. WGR is obvious. Whitehaven is a little less obvious, bit of a turnaround setup. That one gets it in. A little bit of supply removal as well, last two bars. Lots of white candles, lots of accumulation there. And the fact it's a turnaround setup, I'd like to get these in just on a diversification basis, and that one's pretty obvious also. So let us quickly finish now that we know those. We'll do the shorts actually. Why not? Boss Energy. These should be just as obvious. Bank of Queensland's in there more because it's, I think, going to be highly correlated with a rally. So if the stock market goes up, or correlated with the index decline is also, I think. So basically, if the index gets smashed, this should get smashed, which should give us a hedge if you short it. That's the idea there. DGT is pretty obvious. EBO is very obvious. These are all continuation setups. And probably less correlated with the index. FBH maybe more so though. IEL probably less so. These things just tend to be, they haven't been correlated with the index up to this point. They're long-term downtrends. So just because the market crashes, don't assume that they will crash. They probably will go down, but don't assume that's the case. They're moving to the beat of their own drum. Whereas something like Bank of Queensland rode the bull market up, it'll ride the bull market down. Maya, NXL, gap and run today, low close OFX is probably the best setup out there on the short side. Let's quickly go back and finish Perry's, going to EGR, which also looks exemplary. And now I'm wondering why that's not in the list today. I know this has been in the list recently. You can see we've got turnover filter. How did I miss that? How did I miss that? Well, thank you for bringing that to my attention, Perry, because I'll have to put that in the list for tomorrow. No words. I don't know how I missed it. It's definitely not there, but I will rectify that, because that is a picture of demand side control, and therefore certainly deserves plus equals R and plus R. And the reason why I know I've missed it is because it was in there. Pretty sure it was in there. I'm pretty sure it was in there. I'm pretty sure it was in on this day as well, and I'm pretty sure it was in on that day. I'm almost certain it was in on that day too. Let's go to, and Robert's also got that. So we've done 2 of Robert's already. And WIK, of course, we've talked about that one already. Thank you, Perry. Hoosel's got GNP, which was just in that list, and PPS, which is in the broader list. So I didn't run that as a feature today. Certainly made the broader list, and just that little shadow and just these 2 black candles. That's all. I don't like black candles. But very, very strong setup. And it's just whether it was stronger than some of the others, right? So no doubt about it for me, equals R and plus R, because it was in the broader list. If it's in the broader list, that's an add risk to me. Thank you to Perry. Thank you to Hoosel, and thank you to Robert, who's next with AXE, which we obviously had in on this day here, the first time in a long time, on that day there, and then that one there. And then today it's popped and it's pulled back. But I think a pretty harmless day. I know not ideal, 46 back to whatever it was, 42.5, but I think pretty harmless. I think we'll see this area now start to behave as a zone of demand, and we should see the right candles come in here and push back up. I'm not too stressed out about that. Plus 1/3 on this candle. No objections to that. You're getting an intraday dink, a little mini pullback. But for me, I think just one more demand side candle would be preferable. So something that looks like this, and this would be the magic candle if you saw this particular one. Let's go for a nice straight line through here. There you go. Something that looked like that. Downward pointing shadow telling me that this old zone of supply is now acting as a zone of demand, right? The old point of supply here is now behaving as a point of demand. Well, in there. From David, 360 seems to be coming back up. It certainly does. Is it too early to increase risk? Same as MP1. I don't think it's too early. I think if you everything else, it's just pedigree. Certainly the pedigree's there. All I need, David, is what I said before, is just the dink. So any sort of supply side response, just to tell me that it's limited, it's mild, and the demand side is overwhelmingly now back in control. So when I see that, I'll be more inclined. But what you have got here, as you've correctly pointed out, 1, 2, 3, 4, 5, 6 very strong demand side candles. They're there. We know they're there. So we know demand's there. We just don't know how supply feels yet. Supply hasn't had any impact on this rally. They're almost abstaining. They're almost seeing, waiting, lying in wait, lurking to see how far this rally can go, how much better value they'll be provided with the next time they try to sell. And let's just see how powerful they are. Okay, that's all. That's for me. If you wanted to go now, no objections, but I'm going to wait for a dink. Let's go to the latest candle just above short-term trend ribbon. Yes, correct. Point of supply is 55, correct. Yep, I think I've answered that one. PME, also from Al. Yeah, nothing doing here. So short-term downtrend, very clear. Price action is falling peaks and falling troughs. So we have supply reinforcement. So supply is increasing and demand is decreasing. And that's the opposite of what we want, isn't it? If we're going long. So this one's in a bit of trouble. We're also seeing that the long-term uptrend ribbon is doing its job. That's important. It is acting so far as an area of dynamic demand, but it is starting to lose the battle. We've got a transition here to neutral, to amber. We've got a cluster of black candles, so many black candles, just consistently black through here. It did try and rally a little bit there. And again, we talk about this idea of waiting for the dink. We come back up, we look forcefully demand side, and then we want to see how the supply side responds. This kind of proves my point. We know we've got supply up here. We know we've got supply here. We had supply there. But the question mark is about latent supply. What's still in the system? What's lurking in the system? And we can only gauge that from the price action if there's a response, or the size of the response. And here, this was the rally, this was the response. This is the rally, this is the response. What's it telling you about this latent supply? Is there a little bit of latent supply there coming off this top? Or is there a lot of latent supply? Is this demand side market? Or are we confirming the transition into an equilibrium market? I tell you what, if it's a demand side market, there's still FOMO, there's limited supply because people are expecting more and more. They're expecting 350, they're expecting 400, they're expecting 500. We should not see this. We can only see this if those expectations aren't there. And if the demand side is weakened, if they're unwilling to respond or unable to respond because they don't have the cash. So this idea of this dink, it's probably tonight's theme, is, you know, and the reason why we're seeing it is we've had some pullbacks, haven't we? We're pushing into those points of supply and we're trying to gauge, we're feeling in the market for how much supply is still there. A little bit of supply still there, that's good. It'll be a shallow pullback, demand still strong, shallow pullback, white candles, up we go. And we can challenge those points of supply. We can get in before them. We don't have to wait till they're broken. But when we start to see stuff like this, we know that, no, this is more than just a pullback now. This is something more serious. And it could be just a long consolidation phase, holding this long-term uptrend ribbon and eventually bouncing off it. This is probably not a great example. That was all tariff stuff. But, you know, is there an example here? Something like this. There you go. There you go. Is it something like this? Or is it something more sinister? This is starting to look more in the camp of more sinister at this stage. Would I short PME? On the basis that I'm looking for a hedge, basically. I'm looking for something to hedge my long side exposure. So I want to be pretty sure that if the market tanks, it'll go down. I don't want to be in that only bloody stock that the market's just crashed and this is the only thing up on the day, because it was going down when the market was going up, and for whatever reason the funds just switch around and it gets a bit of fund flow back the other way for whatever reason. So it's an aggressive short. It's an aggressive short, and make no mistake, these things do exist, because if we flip this chart upside down, we get Cettire. Can you see that? If we flip this chart upside down, we inverted all the colors. So we went from white candles to black candles. We went from green to pink. This becomes Cettire. And if we're talking about Cettire as an aggressive entry for a long setup, then this becomes the same. This becomes an aggressive entry for a short setup. And there's a lot of reason to want to do that, I think. Let's go. Let's keep going. How we going for time? Awful, as usual. And don't put any new ones in, and we'll be done in 10 minutes, I promise. I think we've got some really fascinating setups tonight. Hopefully you agree. And hopefully I haven't bored you to death talking about them. Matthew, good to see you. Hello, Matthew. Good to have you here as well. US stocks, we'll do those in a second. We're about to head back up the list. Haraju's asking about FLG, which we haven't done, but we have done your next one, which is MYG. Oh, wow. Oh, wow. Oh, wow. I love this chart. This is fantastic. Now, I'm guessing it's the first time I've seen it. So when I say it's the first time I've seen it, your eye, I know, no doubt goes over here, doesn't it? It goes over there and it goes, liquidity filter has not been met. So I haven't seen, these things are invisible to me. But just, it's weird because I look here and I see lots of volume. I know everything's relative, 1,020 cents. But this looks amply patronised. Is that the right phrase? I mean, there looks like plenty of people around. It just hasn't tripped that silly filter that I have. But this is a wonderful looking chart. This is probably the nicest chart I've seen all night. I shouldn't have to explain why. I think there's value just in my response, which is this is a really neat looking chart. I don't know where it's going next, right? But it has all the hallmarks of excess demand, doesn't it? Of strong, consistent excess demand, a supply side that is unwilling to respond. There's a little bit of a point of supply here. That's the only blemish on this one. You know, maybe into there and into there. But otherwise, yeah, I'm not too fussed about it. But otherwise, it's looks really strong. Thank you for that one, Haraju. Who's just got NEM ZRP? This is a good one because, see, you really didn't have any warning, did you? You just, well, 150. What you could well have argued for 150. It just on the basis that, you know, we'd just be more aggressive if we'd just overloaded on one theme, which I feel many of us probably were getting that way by the end of it. Is that candle in and of itself enough to take risk off the table, even with 150? Look, it's hard to say. It's hard to argue the case for that because all we can see up to that point is that. And if you say, yeah, that's that surely that's the one, I say, well, you're Nostradamus, you know. Even that, like gap down, just a $10 gap, just about, right? $10 gap down. Gold's done that first big black candle. And do you look at gold? Do you look at the gold chart? This, I think, is a valid question. Do you look at the gold chart and say, well, we found supply on gold. Do I start to manage some risk here, even though I don't have the candle? I could see, not on that first gold candle, it was dodgy but not enough. Certainly on the second gold candle, I think you could have done that because it's the connection's going to be obvious. But that's not. I don't think that's that candle. I think it was the one we're going to see. In fact, I know it's not because the first dodgy candle on gold was on the 17th, and you can see that's the 20th. So that's in response. So that'd be a Friday and a Monday, and then that's the next dodgy candle there. So you really couldn't have even made that case. It happened so quickly. I feel like saying, you know, sorry. I feel like apologising, but it's not me. It's not my fault. Apologising for the fact that there was nothing in this chart that could have helped you get out earlier, and I feel bad about that. But there was nothing in this chart that could have helped you get out earlier. It was all demand side to there. That's not a great candle, but it's still not terrible. And even that's a white candle. I know it's a pullback, but it just looks like a routine pullback. And then you get that candle, you go, well, everything's fine. And then you get here, and there's nothing in between that you could have done. But certainly this is a minus R here, you know, because the price action is shot. It's such a big down, and you say, okay, that candle's not too bad. Well, you still have to account for this. And even on this one here, actually, I really should, actually, I did. It's only just occurring to me now. Okay, this is important. Yes, we can say there was some demand that came in on that day. We get that. But we should still consider that the body of that candle, and I don't know if I'm going to be able to draw it, the body of that candle, and this is what my optimized true range actually does. It takes that into account, right? So this candle actually looks very different. It looks like this. Yeah, it's not gonna let me do it, is it? But I can continue to fight it and maybe make it dance for me. That close there is 141.45. Let's see if we can make it do the right thing. Yeah, we can. So that candle there looks more like this, okay? And we're going to have a shadow. It's all right. I'm going to keep fighting here because it's important to make this point. Okay, and the candle's going to get a bit fatter, and that's okay. Just imagining, roughly, that low there is 138 neat. So you can't see what I'm doing off screen here, but get that to the right spot, and that close there we said was 141.45. Okay, so that is what that candle actually looks like. So this is getting rid of this stuff so we're not confused. I just can't make it sit where I want it to. That's impossible. Or can I? Can I? No, I can't. I can't and still have the... I could make it do that, but I don't think that's any better. Anyway, do you get what I'm saying? Like that candle actually looks like that. And if we're now talking about, well, and I don't know of any charting package that's going to do that for you. You just have to be able to visualize it. And that actually looks far more sinister, doesn't it? And I didn't pick that up the first time. My eye was drawn to that little white candle. But actually, that's what we're seeing. So now it actually looks very different. You can't forget that is supply, and that is excess supply. There's a complete gap there, but it's part of that candle. So that looks far more sinister. And I think order of magnitude, 10% pullback, like it's $15 on a $150 stock, is starting to be material now in total. And it's easier to make the case now for that being your first minus risk. I want to delete it. I think I've made my point because I want to get to maybe this one here also is an obvious one. So I think on this day here, there's a very strong argument for ZRP, and whatever comes next is irrelevant, right? It's irrelevant. Happened to be the right decision. So what? It's not relevant. And I don't know who asked this one. Maybe Hoozle asked this one, and I don't know if he's still on it, Hoozle. I don't know. Or I'd be interested to know how you managed your risk on this one. And if it's a case of, well, now you know, right? But yeah, this is a massive black candle here. I mean, this one's even more obvious than the other one because it closed black. But this one here is quite deceptive in that it looks like it's got a white body, but no, actually, it's quite a nasty one. Let's see what Hoozle said. Hoozle hasn't got back to me yet, but he'll get back to me. So ZRP on NEM, that's my takeaway point, I guess. But I'm out 2/3. Okay. Hopefully that'll make sense to everyone there on filling in those gap candles. I don't think there's any other way you can interpret them, to be honest. Bitcoin plus R, BTC, is there one of these things here? Oh, no, BTC Health. I don't think we're talking about BTC Health, are we? Are we talking about Sudesh? Are we talking about Bitcoin? Or are we talking about this one? I don't think we're talking about this one because this one's not only is it not doing anything, but it's Swiss cheese. So I don't think we're talking about that one. I'll get back to you. I'm going to keep moving. Bitcoin. Okay, so Bitcoin, we have to go somewhere else. I'll do this one very quickly. Bitcoin's looking half interesting. What did I say about it a week ago or 2 weeks ago? I can't remember. I just said it was thoroughly uninteresting. And I still think it's thoroughly uninteresting. But it's very similar to that MP1 chart in that we know there's supply up here. Blind Freddy can see that there is substantial supply in and around this 120 to 124,000 zone, right? So same ditto. We're just seeing, like, we want to get there and see a shallow dink there. We just haven't, like, since it was formed here, we haven't seen a single shallow dink at the level. It's just been all supply. What does that tell you? It's like it gets back up there, smash it. Gets back up there, smash it. So if we get back up there, they try to smash it and it doesn't go down, that's when you're onto something. And it's yet to be seen. That's the idea behind the dink. Okay, going back here, let's finish this off. GL1, Did I say we were going to be finished in 10 minutes? GL1, I did mention, was on the list, and it's on the feature list as well for obvious reasons. Great setup on that one. I can't believe I'm saying it on GL1 because it was such a dog for so long. It was in the downtrends list. EZZ, which we also talked about. Well done, Michael. You've got 2 out of 2 and 3 out of 3. Pilbara was not on the list today because of the shadow on that candle, but certainly it is retained at equals R certainly, and it would be plus R on the next demand side candle. And I also can't believe I'm saying that on Pilbara Minerals because it was, again, one of the most featured downtrends as well. But it first came back in, I don't know about there, you probably went back to neutral here, which was frustrating. I can't remember, that was the reopening of the stupid mine. Like, who cares? Oh God, and then it started coming back in, maybe here, and certainly there. Let's go back to, and we're all done. We're doing US stocks, heading back up the list, and there's only about 3 or 4 of these to do. Starting off with Perry's GM. Let me go here and here. So we have all our previous markings. And Perry's got GM. Oh, okay, General Motors. Interesting. Oh, well, that looks good. Let's go to the weekly chart, see if there's anything out the corner of our eye, which I'm surprised because I'm surprised. If you tell me General Motors is at an all-time high, I'm shocked. Surely that can't be the case. It is indeed. Well, what happened back here? I can't remember. I didn't list then. What happened? Something happened. I can't recall. Yeah, well, you got me there in this day and age of electric vehicles, and I know they'll have some. I couldn't tell you which one is theirs. I know they had the Volt a long time ago, but that surprises me. But I digress. I should just shut up and talk about the technicals, which are exemplary. I can't fault them. Don't forget that as much as we talked about those gaps being part of those downward candles, this gap here is part of this upward candle. That lower shadow, oh, that's got a nice lower shadow. That lower shadow doesn't exist in space and time. That is a white candle that goes all the way down to here. You need to be able to visualize this, and then with a very small upward shadow. And what it does, it'll balance out some of these shadows for you. So you might see a candle that I put, a chart that I put in as even a feature sometimes. You say, oh, that's got a bit of a shadow at the top. But or the shadow is quite large relative to the candle, but you kind of miss there's a huge gap there as well. And when you look at that shadow relative to the broader candle, it's actually very, very small. So this is all very good. No complaints here. Equals R, obviously, if you happen to have it, plus R if you don't have to wait for next demand side candle, in my opinion, because you're seeing one right there. Perry's second one is AMD. Now, this is obviously your big chip manufacturer, rival to NVIDIA. This one, I can believe, is making an all-time high. Who would have thought that General Motors and AMD would be making an all-time high on the same day? That is curious in itself. But this is exemplary. I cannot fault this chart. And I'm going to look at NVIDIA after this, because if this one is booming, that one probably is as well. But this is a very nice-looking piece of work. And as sketchy potentially some of the things are in Australia, we had a look at those sectors and they were all a bit ho-hum. But, we're in America here, and we're in a real market that can actually move. Let's click save on that one, and then we're going to go to NVIDIA, NVDA, which is not on Perry's list, but just for my curiosity, actually not looking as good as AMD, which for me makes AMD look even better because it's now the leader in these two. So that is pretty special in itself. And then going to POWL, something to do with Jerome Powell, perhaps. Interest rates coming. Don't think so. Let's go to the... Oh, jeez. That looks awesome. Very good through here. Good price action. Good candles. Great trends. It's just the stairway. It's just so steady. It's just total lack of downside volatility. Now, ladies and gentlemen, you heard me express this trepidation about Megaport. Do you understand why I have that trepidation about Megaport? It's important because charts like Megaport, let's go back, you might, to the layperson, they might go, that's starting to look interesting, and yet I skip over it without hesitation. Okay? It is, I get it, it's interesting, but is it a setup now? Does it require further analysis right now? I don't feel it does. It would have to do something special here to get it into that boat. I've told you what it needs to do. But the reason is this downside volatility. Why is this downside volatility there? It can only occur if you have some holders that don't want to be holders and they feel really, really strongly about that. Then you look at something like this and it should be very clear how little downside volatility. We want consensus. Consensus is supply side only wants to hold on and demand side only wants to be in. And this chart is more representative of that. The price action here, the lack of downside volatility is something I want to just tattoo on your forehead. Make sure you tattoo it backwards so that when you look in the mirror in the mornings, you can read it. Lack of downside volatility, exclamation mark. For me, that's what I'm looking for in charts. So some great case studies. Thank you to everybody who's participated tonight in giving me these case studies to talk about. And we're going to go to MU, which is Micron, eventually. There we go, Micron Technology, which looks like AMD. No surprises there. Slightly different area that they operate in, but, all high-tech gadgets, right? Let's go plus. Check the technical analyst, not the fundamental analyst here. Let's go escape, and then I can move that up and hit save. I should check that. I know there's not going to be anything there, but just to be double sure. And they are Perry's 4 out of 4 brilliant stocks. And Perry's saying, if I have time, of course I've got time for yours. Perry, I don't care what time of the night it is. It could be 2 a.m. and I'll still do your setups. Let's go to Matthew now, who if you think Perry's good, Matthew is equal in every way. Let's go to Celestica, which there you go is also, look, maybe that last candle's not as good, but certainly everything else is definitely there. And let's go to the weekly chart. I know I'm not going to find anything there. So it's a yes for me. It's not that candle is bad. In fact, it's not bad. It's still good. It's just got a little bit of an upper shadow. But again, when we add back the gap, that upper shadow is far less prominent. So add back the gap. So join the candle to this high, not the close. Join the candle to the high. Join the candle to the high. That's its range, I guess, from the previous candle. And you get a white body in here. You just have to be able to visualize that. So plus R for me. You close on the high is even better, but it's close, certainly close enough for me. Absolutely. Let's go there and there. Happy with that one. Let's go PRIM. Primoris. Ditto on that one. Maybe the downside volatility is just taking this down a notch, and we're talking about without this, 10 out of 10, with that 9 out of 10. And this is why weekly charts are great. You can't see that volatility there. It just looks solid downside, downward shadow. Yes, for me, I don't know if I like this one as much as the other one simply because of the downside volatility, but I'm really being very picky here. Being very, very picky. That's all. And I'm not just saying that. I really mean it. It's add the shadow back in, and everything else checks out. So we're talking about this in the context of all of that. If you take out this downside volatility, where's the other downside volatility? Okay, it just doesn't exist. But there's a bit here. Okay, so we're going from 10 out of 10, we're bringing it down to 9 out of 10. And you might say, oh, well, it's still 9 out of 10. Okay, but we're trying to get to the best, aren't we? We need some objective ways to be able to get to a smaller list, because we can't take all the trades. So if that was the one thing that made you go a different way, then that's it, isn't it? Both reporting after the close as well, okay? Keep an eye out for those. But most of the time, they tend to report well. This one here, again, just the downside volatility, just to pull back to here. It's encroaching on these peaks as well. So this pullback I'm talking about, I know this is popping back up, I get it, but they just undermine my confidence. That's all. So again, we're talking now bring it back a point. 9 out of 10, 8.5 out of 10. This one, just creating some supply there. I would think about those things. Okay, it wouldn't stop me if you felt very strongly about it, because everything else is still intact. But whether they're as good as maybe some of the other ones we saw, I'm not as sure about some of those. But thank you for those. We need to have them to be able to get a decent mix of setups to be able to discuss. I think this one looks very strong. So shallower downside volatility. Short-term uptrend ribbon being respected, not breached. Little base pattern there. I know we're not going to see anything out here. Looks even better on the weekly chart. So yes for me, yeah. There's downside volatility, but a much smaller black candle. It's all shadow. There's some here as well. I get it. So 9 out of 10, 9.5 out of 10. We're splitting hairs. Let's go back. I'm curious. CLS. No, that one was fine. No complaints on that. That was 10 out of 10. That one's 10 out of 10. I'm okay with that one. What was the other one? PRAM. And what I'm trying to do here is just the really fine details. If these are the final ones on the list, how do we choose between them? How many blacks are there? Where are we? The short-term ribbon's still holding. Going back to Google. And this is just, you just flip between them. We're just looking at this stuff at the end because everything else is fine, right, on both of them. And we've got a higher peak here. We've got a high peak, high trough through here. Here, we've taken out that trough. So just little points that we can use, objective points, not subjective, that I think if I had to choose between the two, I think I would go this one first. And what else have you got here? Adonis, and that's it. So that's the list. But some really, really great setups there. Thank you, everybody. If there's nothing else, and I think we're all exhausted, I'm certainly exhausted. It's certainly past time. Roscoe's checking out. He's going to watch the recording. Thank you, everybody, for your positive emojis there. If you don't like it, let me know as well. I'm sure we can do things better here too. Let's head over here in the meantime. Look, I don't know, it's just a chat about the markets, isn't it, on a Monday night? General advice, ask somebody who's smarter than you and me about what to do with your money if you're not sure. You could lose a bit of it, be careful. It's always you who's responsible for the stuff you do, not me. And that brings us to the end of another Markets on Monday nights, isn't it? We should just call that now. Markets, we should call it that now. Markets on Monday nights with Carl and you, because you're the other important part of this equation as well. I can't do it without you. Thanks for joining me. All the best if you're trading and investing. Until we catch up again. Bye-bye for now.